Hey everyone, welcome back to MSTR Daily. My name is Matt, and in this video, we are going to look at a few headlines that are negative towards MSTR. We also have Adam back saying MSTR is undervalued, and we have Saylor in person with Charles on Fox Business talking Bitcoin. But before we get into the video, I just released my Google Sheet tracker for MSTR to MSTR Pro members, so if you want to get weekly market updates and access to my portfolio, then check out MSTR Pro in the description. Okay, Wall Street hates MicroStrategy. Well, kind of. Financial media hates MSTR, while some of the largest investment banks, hedge funds, and insurance companies really love MSTR convertible bonds and the performance of the stock. But if you looked at a few of these headlines, you'd think that MicroStrategy was the worst investment of the year and that Wall Street absolutely despises it. Look at this one. The New York Times, the cryptocurrency you may not even know you own. Many funds hold stakes in MicroStrategy, which behaves like Bitcoin's wilder cousin. This may not be what you want in your retirement portfolio, our columnist says. Oh, well, thank goodness the New York Times columnist is here to save our retirement portfolios. In fact, he may faint when he sees that 100% of my retirement account is in MSTR and MSTR derivatives. If you want to see the details for that, it's in MSTR Pro, link below. The next headline is from Blockworks. At the MicroStrategy table, shareholders are the sucker. Volatility is MicroStrategy's product. Well, he's not wrong about the product. It is in fact volatility, but saying that shareholders are the sucker is wildly misguided. MSTR is up 433% year to date. So no, I don't think shareholders are the suckers. In fact, the way that MicroStrategy structures its debt and equity offerings, the equity holders get all of the leftover volatility and performance that has been stripped from the convertible bonds and other security products in the future.
Chairman, your average, Michael, it's good to have you in studio again. Your average for those 400,000 is 58,000 per Bitcoin, so it's been moving higher as you keep buying at higher prices.
We bought it about 42 times since August of 2020 to today.
From August of, and at this point, the strategy is to issue stock or convertible debt of MicroStrategy and use that to buy Bitcoin.
We're a Bitcoin treasury company, so we're securitizing Bitcoin. We're providing high performance equity. We're also providing convertible bonds. We've provided other kinds of bonds in the past, but primarily our job is to bridge the traditional capital markets that want bonds, or they want fixed income, or they want equity, or they want options. And we plug that into the crypto economy, and we use Bitcoin as the vehicle to do that.
So if you have the stones to hold the equity, you are going to get a better performance than the convertible bonds and other fixed income securities that MSTR might issue in the future. And if we look at what happened just in the last week, MicroStrategy announced that they purchased another 21,550 Bitcoin for around $2.1 billion. And this has just become the routine since the presidential election. Saylor and MicroStrategy have announced new acquisitions every Monday, primarily from issuing new equity to raise capital, but also from a $3 billion convertible bond. And with the recent rally all the way up to $540 per share and the correction that followed, people on Twitter are complaining about the lack of performance and blaming Saylor for hitting the ATM too much. And this boggles my mind because they simply don't understand the long-term value creation taking place. Let me lay this out for you. If we look at just the last week, MSTR issued around $2.1 billion worth of equity and subsequently purchased $2.1 billion worth of Bitcoin. But this is where the math gets really interesting. They issued 2.3% more equity, but they increased their total Bitcoin holdings by 5.35%. The premium on top of the Bitcoin treasury is temporary and can fluctuate, but the Bitcoin holdings are forever. As Saylor says, it is permanent capital on the balance sheet. So what has been happening is that MSTR is issuing equity and buying Bitcoin. So while doing this, the company may compress its multiple slightly, but MSTR is growing into its valuation. And this is super important even in the short term, because as they compress the multiple and grow into their valuation by transmuting temporary stock volatility into permanent capital, they are raising both the future floor of the stock and the future ceiling. Because by growing the balance sheet, they raise the ceiling for a potential future premium valuation. Now, if you're holding 0 DTE options, then yeah, this isn't optimal. But if you realize that this company is going to acquire a Nakamoto worth of Bitcoin and monetize it in the future, I wouldn't worry too much about the short-term price fluctuations in the stock, and I would focus on the long-term value creation through accretive Bitcoin purchases and future revenue streams using that Bitcoin. The next headline is from Barron's and says this: MicroStrategy is winning by breaking Wall Street's rules. Avoid the stock. And the subtitle is investors are paying nearly $240,000 for each of the company's Bitcoins, well above market price. Well, Andrew, March 2024 is calling and it wants wants its outdated arguments back. Fun fact that people cannot get their head around, MSTR is not a closed-end trust. Therefore, the metric that I have even used in this video and many other people use to value MSTR, the net asset value, actually isn't a great metric. Investors have no legal claim on the Bitcoin on the balance sheet. What you own when you purchase a share of MicroStrategy is a piece of the business. Now, that does include the assets, the liabilities, and the future cash flows, but it does not give you a direct piece to a certain number of Bitcoin. In fact, Jeff Park from Bitwise just outlined why MNAV is such a bad place to start when trying to value MicroStrategy. Watch this clip.
The more I realized there's actually various levers at play for MicroStrategy that is not just about the Bitcoin thesis. There's actually a different scarcity thesis behind MicroStrategy that I actually know very well because I come from the credit investing and hedge fund world in the past 10 years that I spent before joining Bitwise. And that was the moment that I had opened my eyes to then recognizing what MicroStrategy truly is. So the thing that I always tell my TradFi friends when they ask about what is going on with MicroStrategy, how could it be worth so much more than the Bitcoin that's on its balance sheet? I immediately tell them, that's the last thing you should be concerned about. The first thing you should ask yourself is, why are people buying the convertible bonds of this capital structure without there being enough supply and this is being gobbled up? That's the first question you have to ask. And then you have to understand the investment management industry is built off of an apparatus for which performance is a big factor in how asset gathering works. And if you look at all the corporate bonds in America over this year and recognize where your peers have outperformed you as a benchmark or not, one asset sticks out. It's MicroStrategy bonds. Those bonds are up 200+% this year in ways that no corporate bonds could ever behave that way with the scale that MicroStrategy provides. And so if you're a fund manager, you might not know anything about Bitcoin. You might not even know about MicroStrategy, but it popped up on your Bloomberg. And now you're thinking, man, what is that thing that I have to own? Because all the other folks who had it are beating me. And now I need it to even compete on an index basis that is the investment management industry. So what I'm trying to hint at is that the credit paper itself has some scarcity value. There are people that want it and cannot get it. And once you introduce scarcity to the financial services industry outside of the hard asset of Bitcoin, you can do a lot of funny things. And pricing is irrational and it becomes emotional. The kinds of dilutions that would be anticipated through those convertibles makes MicroStrategy maybe the only asset in the world where people are excited to be diluted, which is in itself the most counterintuitive thing. This is why TradFi people don't understand it. Why would you buy something when there's ATMs completely diluting you all the time? And this may be the asset where actually dilution is the goal of the long-term thesis of value accrual. That's why when they came out with the $1 billion convert plus equity program, the stock ripped. And so it's financial engineering at first. The second thing is you have to recognize capital structure arbitrage works in a way where equity is the last piece of seniority for which leverage is subsidizing some of those gains. So there's inherent leverage with MicroStrategy, which is why it does behave with extra volatility and beta to Bitcoin. That should make sense to most people. And then the third thing is, well, how is MicroStrategy doing it? And it does then come to Bitcoin, which is that there really isn't any other way to do it without bringing volatility into this apparatus I just discussed, where credit investors don't want volatility, equity investors want volatility, and you're arbing it. And that's a beautiful thing.
So what do you think of Jeff's take here? Do you agree with how he thinks investors should value MicroStrategy? Because many TradFi folks don't agree, and it's probably due to ignorance or a lack of homework, because these headlines really show that Bitcoin and MSTR are very misunderstood. And that's why I'm starting to understand why Jeff Walton said that this stock's rise will be the most hated rally ever, because he's right. But while most of the financial media hate on MSTR and don't understand Saylor's strategy, we have a tweet from Adam Back outlining why he thinks MSTR is undervalued. And if you're unaware, Adam Back created Hashcash and was cited in the Bitcoin white paper. This is not an appeal to authority, I just thought that would be important to mention. This is what he said. MSTR looks mispriced in my opinion. In Bitcoin, 3.9 to 4.1 Bitcoin per 1,000 shares. His view is that it should be more than that. The treasury premium around 2x. He thinks that that will grow to 2.5 to 3x once things shake out. They will continue to acquire more Bitcoin, and then maybe with the S&P 500 inclusion and some more positive news, this implies that at a Bitcoin price of $100,000, MSTR should be around $485 to $585 $125 per share. And I have to agree with Adam. I think at the time of recording, MSTR is slightly undervalued. And I think that the market was overheated at the end of November, and there were a lot of new shorts that entered the market along with the new equity issuance from MSTR to capitalize on the short-term volatility to add more permanent capital to the balance sheet. And even this week, we have a few cool things coming up. With the NASDAQ 100 announcement this Friday and hopeful inclusion the following Friday, I'm optimistic that the stock can lightly recover into the end of the year as it prepares for an explosive 2025, but we're going to have to see. It's important to be prepared for many scenarios. Okay, for our last story, we have Michael Saylor in person at the Fox Business Studios with Charles discussing Bitcoin and the MSTR strategy. Watch this.
Volatility is a financial engine. You see volatility in this circumstance is a positive thing and also suitable for raising money in the future. So walk us through how does it really work?
Well, you've got one group of investors that want low volatility. They want a secure, comfortable ride. So we sell them a convertible bond. You've got other kinds of investors that want super high performance, the sports car. They're buying the equity. We borrow the money from the convertible bond market at 0% interest. We buy Bitcoin, we lever up the equity, so the equity outperforms Bitcoin, and that's great for equity investors. And for the bond investors, they can't stand the equity risk, they don't want the downside risk, but they have a huge appetite for the bonds.
Why do they have, I saw one of the critics that said, who the hell is buying these? Who's buying them? They said, why would anyone buy them? They have 0% interest.
Well, one group of people would be long Bitcoin investors. They're going to buy the bonds because they get the upside of Bitcoin without the downside. Another group of investors are convertible arbitragers. They actually buy the bond, short the stock, extract sort of a risk-free premium out of the instrument, and they can only do that with a convertible bond. They can't do it with equity, and they can't do it with Bitcoin. Bitcoin represents the digital transformation of hundreds of trillions of dollars of capital in the world.
Right.
No one expected to see it, so they don't quite get
right.
what it's going to be, except for the fact it's worth all the money in the world.
You're saying in 21 years, $280 trillion. How do we get there?
What I'm saying is the wealth in the entire world is growing because of innovation, because
right.
of technology, but also because of inflation. And people are thinking to sell their Central African real estate to buy Bitcoin, or sell their Siberian natural gas to buy Bitcoin, or sell their Argentine currency to buy Bitcoin. So as people migrate their capital into this global monetary asset, that asset class is going to grow faster
than the rest
than
of
equity,
them.
faster than gold, faster than real estate.
But also, did I read somewhere that you're saying each Bitcoin would be worth the equivalent of $13 million?
Yeah, well, when you crank in the growth rate, which for me, the base case is 29% a year on average for 21 years, that gets you from where we are today to 13 million a coin in the year 2045.
All right, the third part of this, I got to talk about your saga, because you are such an amazing story. This right here, the headline, from the New York Daily News in March of 2000. Lost $6 billion in a day. Hotshot tech CEO loses his fortune. I mean, they blamed you for this massive crash in the stock. How did you deal with this then and stay focused to get to where you are right now?
It's very humbling. It reminds you sometimes that you need a good team and you can't do too much too fast. I wish I'd had Bitcoin back then. My life would have been a lot easier. I think having lived through all the difficulties of my 30 years in business, when I got to the point where I saw Bitcoin, I realized the elegance of
Did you have a
betting on
eureka moment
decentralized
when you put it all together? Was there like a eureka moment? You ran out of the house with a bath towel on, like, I figured it out?
Yeah, it's everybody working themselves to death as hard as they can, and they can't get ahead.
Yeah.
And that's because you're trying to do too much, but you don't have the right savings technology. And so Bitcoin was that way out of that working myself to death.
Let me know what you thought about Saylor's appearance on Fox Business. He's appearing in every podcast on every news network recently. He's been on Bloomberg, CNBC, Yahoo Finance, and Fox Business, and he's really making the rounds. Do you agree with his messaging and the mission of the company? And with that, thank you so much for watching today's video. And if you want to see my perspective on the market, check out MSTR Pro in the description. And to finish out, here's a clip from Joe telling a TradFi guy that he missed Bitcoin. Thanks for watching, and I'll see you in the next video.
But certainly it's getting the attention, and we're getting lots of questions about it.
40% since the election, but 60% ARR for 15 years or 10 or 15 years. So I mean, you've missed it.
We have missed that.